and welcome to day 2 of the UNEP FI Global Roundtable. This is the panel session on Africa. My name is Ruben Muhedoa Boy, and I'm the UNEP FI Africa Regional Coordinator. We all know that in recent times, a lot has been said about sustainable finance practices globally, and the purpose of today's panel is to help us deep dive and contextualize what the progress on sustainable finance has looked like for financial institutions in Africa. On the panel today, I'm delighted to have with me 6 business leaders from across the continent, both in banking and insurance. And I should note that they are all representing companies that are signatories to the Principles for Responsible Banking and the Principles for Sustainable Insurance. Of course, they all have very rich CVs and profiles, so I'll perhaps only mention a few things, probably 3, like a perfect, trinity on each of them, so that you know our panel. First on the panel is Judith Othiambo. Judith is the Group Head of Corporate and Regulatory Affairs at KCB Group and is based out of Kenya. She has been the team lead on implementation of sustainability agenda, SDGs, and Women in Leadership Network for the KCB Group. Lastly, Judith represents KCB in industry-related forums such as the Kenya Bankers Association and the Kenya Private Sector Alliance, and also including the UN Global Compact Kenya chapter. Next on my panel is Omobolanle, Victor-Laniyan. Omobolanle is a group head of sustainability at Access Bank and is based out of Nigeria. She has led various sustainability initiatives at Access Bank, and the bank, I should note, is a 3-time consecutive winner of the Most Sustainable Bank of the Year award by the Central Bank of Nigeria. Lastly, Omobolanle is a 2-time recipient of the Most Outstanding Sustainability Practitioner in Africa award, which is awarded by the Sustainability Enterprise and Responsibility Awards. Third on my panel, I have Madeleine Ronkest. Madeleine is the head of environmental, social, and climate risk management at FirstRand, and she's based out of South Africa. She has served on the UNEP FI Global Steering Committee and other board committees on UNEP FI, and also on the South Africa Advisory Committee on Environment and Society. I should mention that Madeleine was recently appointed as a senior associate by the University of Cambridge Institute for Sustainability Leadership, and she's part of the informal group working on development of the Task Force for Nature-Related Financial Disclosures, the TNFD. Next on my panel, I have Dorothy Maseke. Dorothy is the head of risk and compliance at ICA Lion Group and is based out of Kenya. She's spearheading the implementation of the principles of sustainable insurance at ICA Lion, and ICA is one of the first insurance companies in the region to sign on these principles. She's also a member of TCFD's Insurance Pilot Group. On the industry front, she's the founding chair of the Institute of Risk Management East Africa and recently was elected to the global board of the Institute of Risk Management. I should also mention that last year, Dorothy was nominated as one of the top 40 under 40 women in Kenya and is a recipient of several awards in risk management. On the panel, I have 2 gents. One is Musa Salah. Musa is a group head of environmental and sustainability at EcoBank and is based out of Togo. He's also the chair of the Ghana Sustainable Banking Committee and previously served on the Ghana National Climate Change Committee. Musa has a long-standing relationship with UNEP FI, having served as a member of the UNEP FI Global Steering Committee from 2018. Last and not the least on my panel is Kasim Hansa, who I fondly refer to as Cass. Cass is the group head of underwriting and claims at Continental Re and is based out of South Africa. Interestingly, I should note Cass is a professional engineer who's accumulated years of experience in both engineering and insurance. And previously, he was the MD of Continental Re in Botswana before taking up his new role as the group head of underwriting in March 2020. So welcome, everyone. Welcome to the panel. And welcome to all the audience. And for today's session, how I want us to start off, I will start off with a poll, which should get us going. And the poll for today, I will invite you to head to slido.com. If you just put on your phone or on your PC, slido.com, and use the code GRT 2020, you will find 2 poll questions on it on slido.com, which is on your screen. GRT 2020. The first question we are asking: are financial institutions taking sufficient ownership to drive implementation of sustainable finance? And secondly, we are asking, what is the one word that sums up what is still needed to create an enabling environment for scaling up sustainable finance? We will be sharing the results of the poll at the end of the session. Let's get started. Let me start with you, Judith. In your opinion, do you think financial institutions in Africa are doing enough to lead implementation of sustainable finance? 1 minute, please.
Thank you, Ruben. Yes, I would agree that yes, financial institutions in Africa are playing a key role to push through the sustainable finance agenda, because most of the time these initiatives are there, they are done, but probably people do not understand what forms part of sustainable finance. So I would agree with you that yes, this is being done. And of course, KCB is a good example of that.
Great. So Judith says and thinks that financial institutions are doing enough. Omobolanle, what do you think?
Thank you, Ruben. I believe that financial institutions in Africa are, first of all, supportive of the principles. I mean, to start with, about 5 of the 28 banks that developed the principles are indigenous African banks, and they played key roles during the process. Also at the launch, we had quite a significant amount of banks. But again, we're all at different stages in our sustainability journey. And the journey of 1,000 miles begins with a step. So I recognize that maybe not all signatories are starting the journey from the same place, but I see incremental progress being made. And I mean, we just need to keep our focus moving, as one. I think that the principles on its own serve as a common baseline and framework for implementation. And I believe that the learnings from the annual review of the implementation will play a catalytic role to help all banks, all financial institutions, regardless of region, to improve on performance. Thank you.
Madeleine?
Ruben, I'm just thinking of the analogy now. I can see the elephant of Africa starting to move and waking up. And so I see movement. I see pockets of movement in Kenya, Nigeria, in South Africa. And I'm so happy to be part of this movement. But I don't think that we're doing enough yet, and we need to bring it to scale. And but I think we have the right role players, especially around this panel, and that we can mobilize sustainable finance at scale.
Great. Dorothy?
Ruben, I think it largely depends on where they are in the sustainability maturity curve. And it also depends on, the financial institution itself. Banking definitely is way ahead. We are seeing a bit more traction in asset management. Insurance, I must say we are still quite behind. We are trying, we are making progress. Insurance in East and Central Africa is just beginning to walk the journey again, learning from other markets. But for me, I think the key challenge for us is, moving away from sustainable finance being regarded as a buzzword or a flavor of the month to a more conscious way of doing business that actually adds value and has impact to our community. So we still have some journey to cover, some distance to cover.
So, sir, then Cass.
Like all other people have said, the journey has begun. And what is more important is the geographic dimension to the success we are achieving when it comes to sustainable finance in the continent. While you see significant traction in, for instance, Anglophone countries, as rightly mentioned, South Africa, Nigeria, Kenya, Coming from a Pan-African bank with geographic footprint in 33 countries, mainly in Francophone countries, the journey is not the same. And this is where there's a need for enhanced awareness. Luckily, the principle for responsible banking is creating opportunity for financial intermediaries to benchmark against each other so as to determine their positioning when it comes to sustainable finance. And eventually, through collaboration, significant network could be built for effective implementation going forward.
Thank you. Tash?
Yes, thanks, Ruben. I think the other speakers hit it on the head. Most of the institutions are doing quite a bit of work in this regard, especially in the banking fraternity. The issue, of course, is whether we're doing enough. But you ask about implementation, and I think prior to that, we all know the related considerations on implementation relate to policies and means. So let's say we get the policy right. And listening to speakers yesterday, there's an abundance of good green, blue policy out there. As for the means or the resources, somebody yesterday also mentioned a 6 capital approach yesterday. So let's say we have those two by and large in the bag. It still appears we're having difficulty to successfully implement in scale and scope, as Madeleine has hinted at as well. So what do I think is the problem? I think a regulatory framework for integrated performance measurement and reporting, regulated TCFDs, and perhaps incentives. So measuring the degree of the success and the disclosure of those sustainability initiatives is still difficult to my mind. And much work and industry-wide collaborative efforts are required. So I think we may need a carrot and stick approach to those disclosure objectives. Thanks.
Thank you. And thanks, because what you've just shared is gonna lay a good foundation for the questions we're going to discuss. Maybe just before I delve into the sustainable finance questions, let's discuss the elephant in the room, which is COVID. We have the COVID pandemic. The consequences for it for the global economy and the financial sector are quite unpredictable, I would say. And as I read a Financial Times article, which said, with COVID, what's happening, we are, to quote, we are in the same ocean, perhaps, but in different boats because everyone is affected differently. And I just want to get your views on, what do you think is the intersection between dealing with the ecological challenge of climate change and now having to deal with a pandemic? And what does this mean for all of you as financial institutions? Judith. You're on mute.
Thank you. Thank you. So I'd like to speak from the context of what KCB has done in terms of this COVID pandemic. Of course, it was a very difficult time, I think, for every organization, whether we're in the public or the private sector. And so some of the measures that we had to take first was, of course, we had to take care of our staff, because our staff are the key people who drive our business. So how do we take care of all these 7,000 people who run our day-to-day business to make sure that their health and well-being is taken care of? Another thing that we looked at was looking at how do we cushion our customers, because they were also facing difficulties in terms of their finances. So how could we be able to cushion customers who are distressed? And so the bank was able to restructure facilities for them worth $105 to cushion customers from this effect and help them navigate this period successfully, so that we have less businesses closing, especially SMEs and those that we call micro enterprises who are below the SMEs. Also, another thing was we needed to set aside funds so that we could support especially those who are in the micro enterprises. And we had to set aside 18.4 billion just to make sure that even after the pandemic, we can still be able to sustain them through that period, and they can still be able to run their business properly. Also, in terms of customers, we also ensured that we We suspended the listing of customers on our credit reference bureau. So we gave them also a period so that we don't list them, because we knew they're also going through a period, because most of our customers are also on our mobile platform. We have about 18 million. So basically it was to give them that relief on how can they be able to do their transactions without necessarily having to list them, especially those who default. So we gave them a lead time. And of course, one of the key things we did was we fast-tracked our digital access. So we ensured that all our customers could transact from our digital platform. So it was a big plus, because then we were able to scale up our digital platform access to all our customers. Thank you. Over to you, Ruben.
Thanks, Judith, for that. Omobolanle.
Okay, thank you very much, Ruben. Maybe I should toe the line of Judith and just go straight to a couple of things that Access Bank is doing. So we're technically playing the role of an enabler. We're looking at the ecosystem of finance and technology, and we're creating support structures that help increase the capital strength of Africans, basically. So we have our technology accelerator programs that will help, that is basically helping innovators to network and build demand-driven solutions. I mean, there's no doubt that the COVID-19 pandemic has given us a brutal reminder about the need for us to strengthen the resilience of our society as a whole. And so the decisions that we make can either shape, the economy, or, mar it for many years down the road. So again, to cushion the effects of the pandemic, we offer support to the Nigerian health sector. So Access Bank, under the auspices of the Central Bank of Nigeria, started issuing subsidized loans worth up to 100 billion naira to provide funding to Nigerians' healthcare product manufacturers. And again, this was done to enable the obligors increase their capacity to meet the increasing demand, the healthcare demand arising from the pandemic. So it helped to enhance local drug manufacturing, funding of intensive care units, lab testing, research and development, amongst a wide range of others. Also, Access Bank provided financial support and galvanized the private sector in Nigeria into the coalition against COVID, known as COVID. We donated personally as a bank over 1 billion naira to this effort, with our CEO, Herbert Wigwe, working to lead this effort, to co-lead this effort. And together we're able to raise about 29 billion, which helped in Nigeria basically to improve the capacity of the country to test. So, I mean, for instance, the coalition was able to supply the Nigerian Center for Disease Control with over 60,000 plus test kits.
Thank you, Omobolanle.
Thank you.
Yeah. Let me move on to Madeleine.
Ruben, yes, before the pandemic hit us, First One had already started doing a lot of work on the TCFD, and we are publicly supporting the TCFD. And for us, it sounds terrible, but it was almost a positive thing that happened, because I'm sure you've heard the comparison that the COVID pandemic was the tidal wave. The tsunami that is coming is climate change. And so what it's done for us is strengthen our case. The work has continued throughout COVID, and we came out in support of our national treasury. We brought out a sustainable finance paper in April. We are now working very closely with government in looking at a regulatory platform and writing guidance and guidelines for banks to implement TCFD, and also look at sustainable finance. So the wonderful thing is that economies are rebuilding, and whilst they are rebuilding, they are building green and they are building resiliently. So that's the good news.
Thank you. Dorothy.
To start with, I think I want to focus more on, the direct correlation between COVID-19 and biodiversity loss, and just to state that indeed, even, if you look at the origin of COVID-19, it's actually quite as a result of ESG issues actually coming to the fore. But aside from that, I just want to paint a little picture of the situation here in Kenya. So in Kenya, we are highly dependent on natural resources. About 50% of our GDP is attributed to sectors directly or indirectly reliant on these natural resources. So what does that mean? Climate change, extreme weather events, from reports, it's estimated we lose about 1% of our annual GDP. Obviously, COVID adds another dimension to this. Aside from that, the population, the demographic in Africa, of course, is also quite a young population, quite a productive and active age. And so in answering your question with regards to, the effect of COVID and whether as a company we had to change our plans, indeed, COVID and this whole situation, affected us in the manner within which we do business. And as a group, we've had to look for solutions to ensure that, our partners, to ensure that our clients still remain resilient, even in light of these difficult, times. We are publicly supporting the TCFD. We have contributed financially to the COVID fund to the tune of about 20 million shillings. And we continuously look at the kind of solutions and products that we are pushing out to the market. So it's more about, being agile enough to take the situation as it is, and also to support any efforts to make, the continent more resilient in future.
Great, thanks, Dorothy. Cass.
Did you mention my name, Ruben?
Yes.
Okay, sorry, I didn't hear you there. Look, I think your question is fairly broad. And where I'd like to approach is maybe from our own perspectives and experience, what were our reactions and responses as let's say, as a typical reinsurer? And maybe number two, did it introduce substantial change management considerations to mitigate operational disruptions? Did it drive resilience? On the first score, I think Judith has made mention of most of the things that I think corporates have done. You dust off and initiate business continuity plans. You look at the safety of staff and stakeholders, and of course, initiate work from home. So let me not spend too much time on that. I guess everybody knows that. But I think for us, what we wanted to do with COVID-19 was to set up and scrutinize the business operational model and validate what was essential. So what we did is we referenced the business canvas model to sort of get ourselves to a back to basics setup and to look at our value proposition. And now that was to play out towards sustainable revenue streams and of course, containing our cost structures. I think our biggest concern was not so much around the renewing of existing business. We found that we were firing on all pistons in that regard. But the concerns were of the macroeconomic environment and our prospects for growth, securing our underwriting margin, and then the impact, of course, on our investment portfolio. We were concerned, would it play out and warrant a serious vertical excision of our staff complement right at the beginning? We didn't know. How long was this to play out? We can talk sustainability, but then over what duration? And then the inevitable credit control and cash flow dynamics, which are in any event a serious operational issue and concern for re and insurers on the continent. And we thought that these were going to potentially worsen with COVID-19. But on to the concept of resilience, insurers, I think, had a major opportunity to review and update their business continuity plans, their business models, and seek new ways to innovatively become more resilient. For those who operated with manual, analog type systems, for example, and there were apparently a number on the continent, digitization became a rapid development, which then hopefully leads to a more robust digital transformation era.
Thanks, Cass.
Okay, thank you, sir.
And let me turn on to Musa.
Yeah, thank you, Ruben. In addition to what other speakers have said, COVID actually helped to reposition the importance of environment. As many of us will note, at the peak of COVID between March and July, but in many African countries, we noticed that due to the restriction in movement and the low industrial operational activity, the sky became much more clearer. For the first time in 10 years in the city of Lome, I could look up at night and see and saw the sky very clear and stars. So that's a way of repositioning. Now, in addition to what other speakers have said as part of the corporate measures to address and to create resilience in the period of COVID, we look at the same measures. We also contribute to the health facility development and improvement in most of our host countries, in all our host countries, I should say, with a significant amount. But in addition to that, we also implement a much more robust and regular market and sector commodity analysis so as to determine the impact of COVID on our portfolio. Beyond that, in so doing, we make sure that we also incorporate the tenet of ESG in our market analysis framework, making sure that one of the things that is most likely to happen in this kind of pandemic is that corporates are likely to be disengaging or retrenching or redeploying their staff. And this could rather worsen the situation when it comes to the economics and sustainable livelihood. So we make sure there's a need to cushion and to restructure some of the facility to prevent any hardship or to safeguard against significant hardship. More importantly, too, from our side, too, we started looking at post-COVID. We know with the the impact of COVID on the economy, what is likely to happen is that immediate post-COVID, we see rush into economic recovery. And this economic recovery is going to be mainly in the area of extractive industry, heavy infrastructure. And these are the areas that are likely to create more environmental and social concern. So as a result, we put up a mechanism to engage our clients as well as our stakeholders on how to embark on their post-COVID recovery measures in a manner that will be environmentally friendly and socially acceptable manner. In so doing, we believe we will be able to position ourselves as a corporate sustainability stewardship to reckon with in this regard.
Thank you, Musa. It's good to hear all the themes coming across, and some of the key themes I pick in regards to COVID and there's the ecological challenge we're having of climate change. So we are hearing themes about restructuring of loans, taking care of employees. There's a lot about resilience, which I think is at the very core of COVID, and especially for the financial industry playing a role. We've had about support for the health sector, what this means for reliance on some sectors like natural resources. There's the issue about demographics, especially knowing the very young population we have in Africa. We've had issues about portfolio impact, and Musa has helped us see, what COVID means as a rallying call for economic recovery. We're going to move on to the meat of the discussion, and for the next questions, I'll please ask our panel to keep it to 3 or 3.5 minutes. I know we have a lot to say, but if you can try keep it to that would be useful. So I want us to talk about sustainable finance in your operations, and just specific to the context of each of your institutions. So let me start with Judith. So Judith, we know that KCB Bank was among the founding signatories of the UN Principles for Responsible Banking. And could you share with us how the KCB Bank vision aligns with the SDGs in the countries where you operate? I think 6 countries, and now an office in the region, in the Republic of Ethiopia, and how the principles of responsible banking has helped in this regard. You're on mute.
Yeah, thank you, Ruben. Thank you, Ruben. So just to share what KCB has done with regards to the principles, is that one of the good things was that even as we're working on the principles which were launched last year, the bank was also coming to an end of its previous strategy, and we were working on a new strategy for the next 3 years. So it became a good opportunity for us to align our strategy now with the principles for responsible banking. And so we took action to make sure that we align our 6 principles with what is the expectation on our strategy as a bank. So the theme of the bank, the theme of the new strategy is actually beyond banking. So it's not just about banking, but looking at it beyond to our wider stakeholders, beyond to include our partners in areas that you may not have the expertise, looking beyond also into our communities and also society as a whole. One of the things that we did as we aligned that to business is also to make sure that we do capacity building and awareness for staff. So we had to train our staff to understand what are these 6 principles and what do these 6 principles represent in our new strategy, and also what does it mean for our sustainability strategy going forward. Thirdly, what we did also, we looked at the policies that we can be able to implement even as we look at the 6 principles. So one of the policies that we felt quickly should come into place is the KCB Group Gender and Financial Inclusion Policy. So this one basically looks at women, the youth, and also the persons with disabilities. So to make sure that we are more inclusive in the way we do our business and also access to finance and credit. We also reviewed our KCB Group stakeholder policy. So that policy was also important for us just to make sure that we include the wider stakeholders in the society as opposed to the immediate and priority stakeholders. And then, of course, our sustainability policy also, we added the issue of the persons with disability also, just to make sure it is more inclusive. So out of this also, one of the things that we did, a part of climate adaptation and mitigation, is to fast track our accreditation to the Green Climate Fund, because one of the things that we said for us to have a clear focus on climate issues, it's important that then we fast track our accreditation. So we are hoping that towards the end of this year or early next year, we should be able to get our accreditation, and this will enable us increase our portfolio in the green lending and therefore have a better impact reporting for our reporting in terms of what are we doing in the principles for responsible banking. Over to you, Ruben.
Thank you very much, Judith. That was very concise. And just to build on that, it's good to see what financial institutions are doing. With regards with. It seems like there's more identification of vulnerable groups because we also don't want to deal with sustainable finance in a way that we produce winners and losers per se within society and just have more equitable growth. So thank you for that. I'll move on to Omobolanle on this. And Omobolanle, we also know that Access Bank was one of the founding signatories as well of the Principles for Responsible Banking, just like ACB. And could you share with us what this has meant for the bank? And specifically, I would like you to focus on how the principles have helped the bank to align its products and services to positive and sustainable impact targets. So if you can help us understand the impact setting and target setting mechanism.
Okay, thank you very much, Ruben. So, as Africa's gateway to the world, what the principles have done is they've further strengthened our ability to localize global goals, right, for our business strategy across all the markets where we operate, especially in Africa. So the principles have contributed to how we anticipate and rapidly respond to technological developments, changing customer preferences and regulatory policies. So far, our products and services are now being increasingly designed to deliver positive impact in line with our various sustainability targets that we've set across social and environmental areas. For instance, we've now developed what we call a product portfolio management system, which is aligned with the PRBs, basically to address the identification and assessment of risk associated with the introduction or amendments, of products and services. So what we've found that we increasingly do is not necessarily just introduce new products. There are existing products and services that we then, amend and restructure in line with, changing demands and the targets that we set for ourselves in terms of our ERNS targets. So, I mean, a component of the product portfolio management system is that we analyze our business activities and identify operational, environmental, social, technological, digital, and other risks that could, affect the achievement of our business positive impact. Also, I mean, in line with the ESG matrix and targets that we've set, we're now focusing increasingly on green financing solution, to support the growth of environmental investments, particularly in Nigeria and across Africa. And an example that we've seen is the launch of our green bond, which is the first ever climate bond initiative certified corporate green bond in Africa. And earlier this year was also listed on the Luxembourg Stock Exchange. So again, in terms of this, we see that the ESG metrics of the bank have become increasingly, especially with the signing on of the principles, even a more important input into the way we make our business decisions. And we all know the complexities of Africa and the growing challenges related to population growth, urban migration, poverty, destruction of biodiversity, and all of that. So we continue to do a complete assessment of our borrower companies, because we know that is critical. We evaluate, in addition to the financial analysis that we do before borrowing, we evaluate the ESG policies and practices, specifically relating to the environmental stewardship. We also look at issues around employees, local suppliers and contractors, the local communities and governance, practices. Also, we aim to promote social and economic inclusion amongst our marginalized customer segments. So our ESG impact assessment helps us to become more aware of this and define strategies to support this customer segment. And so we've increasingly started to create inclusive products and deliver services specifically for use by these marginalized groups, as well as seek to continue to develop adaptations to existing products and services for them. Thank you.
Thank you, Omobolanle. I want to a bit and invite everyone for a minute to participate in our poll. Also, the panelists, if you have your phone with you, you can join us for this. If you can do this on your phone or laptop, it's fine. But I want to invite us to fill in the poll. So just go to slido.com, as you can see on the screen. And it's fine if you cannot see, just go to Slido, which is slido.com, and use GRT 2020 to join. And I'll give us a minute to participate in the poll. And the question we are asking is, are financial institutions taking sufficient ownership to drive implementation of sustainable finance practices? Yeah, I can see we have one more response. So yeah, you as we keep polling on slido.com, GRT 2020, I want us to move on to Madeleine. And Madeleine, at First Rand Bank, what has your experience been like? You mentioned that there is the TCFD implementation, And I want to bring to the attention that FirstRand has been one of the banks involved in the TCFD banking pilot for implementation of the TCFD recommendations. And if you could help us understand what has been the experience of FirstRand in driving sustainable finance practice and realigning your business strategy, and how, where does TCFD come in this regard?
Okay, thanks, Ruben. Yes, for FirstRand Group, shared value is our strategy. That is our business strategy. And one of the centerpieces of that strategy is climate change. And so I'm happy to be around whilst our business leaders are making decisions around climate change and what the business is heading for. And it's specifically focused on resilience and communities and the customers that we serve. So in TCFD work, I'm sure you'll all appreciate there are many unknowns and a few challenges, because it makes us think differently than we have before in the banking sector. And we need to get to grips of what exactly the risk is and how deep the risk goes in our portfolio. And we're a group of financial services across investment, insurance, and banking. And so we have to address it from all of those perspectives. So we needed some help, and we reached out to UNEP FI and we joined in the phase 2 work. It was tough because it was busy, and the Secretariat did some excellent work in getting us all together, getting the work streams going. They caught up on information and learnings that they have made to phase 1. So we had to catch up on phase 1 and then participated in phase 2. And we are now looking at joining phase 3 of this work. Because we found it extremely valuable. Not only did we have access to experts who have done this work and gone before us, but we also had access to a network of other banks who were struggling with the same unknowns and challenges. And together we came to some solutions. So the outcome is a transition tool that is available to all our UNEP FI members. And for us, if we didn't apply the methodologies exactly like we learned it there, we certainly knew how to adapt them to work for FirstRand. So I would certainly recommend any bank that's starting out to participate in phase 3. It's not too late. I think there will be a lot of training and development and webinars in one of the phases of one of the parts of phase 3. So it's not too late to participate, and you really get access to the best practice globally. And together we can actually find solutions for this and lead through thought leadership.
Thank you very much, Madeleine. Let me turn on to Musa, and I want us to hear about bank systems. So EcoBank became a signatory of the Principles of Responsible Banking in November last year, and the bank has reported seeking to integrate these principles with the bank's internal environment and social management systems. So what has been the progress to date, Musa, and what are the lessons learned in integrating these principles with existing bank systems?
Yeah, thanks, Ruben. Actually, as you rightly said, the bank became a signatory to PRB last year, toward the end of last year. So in EcoBank, we've seen the 6 principles of PRB as a tool to better enhance our environmental social management system, because we leverage our ESMS in delivering or in supporting our stride towards the attainment of the United Nations Sustainable Development Goal. So here we're looking at integrated approach, leveraging the knowledge from the PRB 6 principles, integrating it into our ESMS, and then to deliver our SDG commitment. If I should take a more from the sector-specific approach, because we have a cross-cutting approach and a sector-specific approach, looking at SDG Goal 2 on zero hunger, as a financial intermediary, what we've looked at is, okay, in so doing, let us look at agriculture and then try to mainstream PRB, our ESMS, to deliver zero hunger as part of our contribution to this particular Goal 2. In so doing, we make sure that we try to create market access efficiency and they will also focus on market supply consistency when it comes to the agricultural product. And then while at the same time too, we are also achieving success when it comes to market return improvement. What does this mean? This means that the key challenges of post-harvest losses, which is reducing the amount of farm product reaching the market, which is also having significant impact on food availability, food accessibility, and food affordability, thereby triggering famine, need to be curtailed. In curtailing this, financial institutions need to intervene, and making the intervention will ultimately reduce famine and then drive towards zero hunger. So, to give it a recap, we're mainstreaming PRB as a tool to effectively deliver our ESMS activity towards achieving sustainable development goals of the United Nations.
Thank you, Musa. I want us to move to the insurance side and listen from Dorothy and Cass. So Dorothy, as we mentioned, ICA is one of the first signatories of the Principles for Sustainable Insurance in the region. And I should mention at this point that the CEO of ICA, Dr. Cesar Mwangi, was recently elected to the board of the UN Principles for Sustainable Insurance. And could you share with us from your experience how this has helped or is helping ICA Lion rethink their strategy with regard to sustainability as an insurer?
Thank you, Ruben. Yes, we are really excited about Dr. Cesar's appointment. And let me say, we started by, we began this journey in 2016. Allow me to be vulnerable here. Back then, we didn't really understand or know what the PSI was. And so we signed in, and the PSI team took us through the detailed principles. And, at that time, we came to the understanding that these principles actually resonated a lot with our core business strategy. Our DNA even then was largely tied to what the PSI stood for. And so it wasn't difficult to realign ourselves. However, I must say that our focus now is shifting more towards a fully conscious alignment. We are making good and steady progress. And, the PSI has 4 principles. So I'll just focus on 2 of the key ones. The first one is on principle 1, and we're expected to embed in our decision-making environmental, social, and governance issues. And for us at ICA Lion Group, we are now looking into, focusing on our underwriting and product development strategies, especially in support of our clients on risk mitigation. And I'll be remiss if I don't mention this example. One of the key ones is on, flood insurance. So we've insured quite a number of lodges and hotels at the Mara. And for those of you who know the Mara, it's one of the, key attractions in Kenya, the wildebeest migration, etc. And now, of course, when it rains, these camps, get flooded. We get a lot of material damage, business interruption, and other huge claims. And as an insurer, we have either of 2 options, either move these hotels from our books and tell them they're not profitable anymore and we're not willing to, insure them, or focus towards redesigning our solutions or our products towards raising their internal risk mitigation strategy. And for us, we chose the latter. We are exploring modern technology, modern, flood risk mapping techniques, basically to ensure that, our partners, our clients are able to remain resilient, even in such a difficult time or situation for them in light of climate change. We also have a strong focus on digital delivery of products. We are working on development. We have online and self-service portals. Within insurance, this has not traditionally been done, but we are focusing towards the changing model of the customer. And more importantly, they need to treat these customers fairly by making information available to them, by ensuring we are communicating in a simple and more transparent manner, etc. The rest, in terms of local procurement, supporting fair practices, those are core to our business. The second focus is on principle 2 and 3, which is mainly on collaboration with the industry, with our regulator, with our business partners, our reinsurers. We are part of the TCFD Insurer Pilot Group as the only African member. and we are assisting in the physical transition and litigation heat map. So that's part of our contribution towards, that collaborative effort. We're also working with other industry players. For example, the Organization of Eastern and Southern Africa Insurers, OSI, will actually be sponsoring the event coming up on the 23rd of this month. That's one of the initiatives, and we are giving it a lot of focus in terms of working, with partners of the same mind. We'll also gladly be hosting next year's PSI Africa Market event. And our outlook for that particular event is to evangelize on ESG and the value that it adds as we challenge the rest of our players, the rest of our, the rest of the industry partners in beginning to focus their efforts on ESG. So, Ruben, those are the key highlights under ICA Lion.
Thank you so much, Dorothy. Let me come to Cass. So, Cass, we've had Dorothy mention about the upcoming Principles for Sustainable Insurance market event next year, hosted by ICA. We know that Continental Re hosted the second market event last year. And Cass, you have had a front row view on the implementation of these principles, having served on the PSI board. So, given your experience and in both engineering and insurance, I want us to deflect a bit and ask you in this regard, what do you see as the challenge for insurers and also reinsurers with regard to sustainability or committing sustainability for pre-committed infrastructural projects? Because we know there's a lot of backlash on infra projects not being ecologically sound, but also it's a lot of investment that has already gone into it. So what do you see? Where do we find the balance?
A nice one, Ruben. And I think your keywords are pre-committed projects. These words, Ruben, captured to my mind the entrenched process of project funding very well, and why really an insurance right at the back end of the supply chain with respect to project initiation are therefore not ideally suited to be the key instigators introducing ESG best practices into the project conceptual design and configuration as it goes. Insurance for me can at best only be the last line of defense in helping, most certainly from their experienced positions as astute risk managers, as opposed to mere risk takers, to guide and facilitate, and most certainly to raise awareness, to introduce clear preventive measures, and of course, best practices. But historically, reinsurers are hardly ever really involved in the feasibility design option stage. Some instances, maybe you'll have conceptual design of firefighting facilities will certainly be heard of, but not necessarily beyond those basic risk elements, and certainly not in relation to ESG consideration. It is, for example, for me, always amazing how insurance risk assessment post the construction completion will come up with dozens of risk mitigating measures and recommendations that should ideally have been thought of at the design stage, like say blast wall protections or fire wall separations, or the basics of a fire sprinkler system, and other such measures for improved worker safety and, of course, improved asset protection. One has to wonder why we work like this in a modern era civilization. Imagine then our opportunity to question and frustrate a pre-committed project on ESG risk issues, more especially from our position, ill-informed desktop underwriting information position. But look, as a proud signatory and member to PSI, we have thought much about this and discussed broadly with our advocacy endeavors. It is our sincere belief that the ultimate challenge is if we can indeed secure an ESG project development ecosystem, that if we all ensure all participating in that value chain of successful infra project delivery, if we all remain aligned to and committed to the SDGs, right from the public and private developers, the entrepreneurs, the financing institutions, importantly, the environmental impact assessment consultants, the professional teams, the contractors, the OEMs, and then as you come into the insurance arena, the retail brokers, insurers and reinsurers, there should really be no ultimate defining need by the wholesalers such as reinsurers to be seeking to decline risk coverage and so be the ultimate arbiters, as it were, on whether a project proceeds or not, or proceeds with pure risk and ESG improvements. To expect this from reinsurers and insurers, for me, is much too late, impractical and perhaps even unreasonable. Clearly, the greatest and most timely opportunity for all to halt and stop an ESG contravening project is at the financing stage, surely. If not there, then at least after the fair and reasonably transparent EIA, environmental impact assessment process. But look, let me not whine too much about this. Be positive. We must be positive. What we are doing is to be active and to endeavor to broaden the movement, to get the market to strongly commit, as Dorothy has said, to the 4 principles of PSI, with our public sector, regulators, insurance associations such as AIO, OSI, the smaller country insurance associations, to broadcast and help the ESG underwriting guidelines, which were excellently formulated by the United Nations PSI and member organizations. Underwriters must make it a common cause and practice to think through ESG risk parameters and help their organizations to proudly disclose those initiatives as per the developing TCFD best practices unfolding globally. So to conclude then on your question of the challenge, I think we need to look at the letters that have been coined as PMPRR. I really like this. It's prevent, mitigate, prepare, respond, and recover. And we can all appreciate those vital actions more so now in the context of our unfolding pandemic, had we indeed done so. It is clear climate change disasters will impact our impoverished and vulnerable continent, and we must therefore adapt and play our rightful global role to mitigate. Thanks, Ruben.
Thank you very much, Nats. And such a wonderful panel that keeps time. As for the last 2 minutes to go, I want us to turn to the audience. We've gotten some responses, and let me see what we have some questions which we haven't had time to address, but let me look at the responses. So in the first question we asked, are financial institutions taking sufficient ownership to drive implementation of sustainable finance practices? Let's see the results. So 50% say probably yes, 39% probably not. Yes, without a doubt is 6. No, without a doubt is 6. And it clearly tells you there's a lot of perception on the topic, and with very clear divides on those who think financial institutions are either doing enough or not doing enough. And I invite the audience to the last poll, where we asked, what is the one word that sums up what is still needed to create an enabling environment for scaling up sustainable finance? So we are seeing collaboration, willingness, commitment. So yeah, collaboration, willingness, commitment. My screen is a bit hidden. Innovation, trust, political will. To my panel, one word, and we close off.
Incentivize.
Okay, next.
Thank you. Let's keep up the spirit and support sustainability. Thank you.
Okay. One word, Musa, Cass, Madeleine.
Commitment to sustainable finance.
I will sound very unoriginal because my word was collaboration. Many hands make a great success.
Okay. Cass?
3 words, Ruben. Trust, trust, trust.
Thank you. So it seems trust and collaboration are the keywords. And to close off the session, thank you very much to my panel and everyone for joining. And I also want to thank all other Africa region signatories of the PRB and PSI who've joined us today. Just a quick mention in 10 seconds. Thanks to ABSA, Standard Bank, NCBA Bank, Fidelity Bank, GTB Bank, Jais Bank, Land Bank, Mauritius Commercial Bank, Ned Bank, IDC South Africa, Polaris Bank, Wema Bank, Zenith, and for the insurers, thanks to Custodian and Allied, Namibri, and Santam, South Africa. Those are the African members of the UNEP FI. Thank you, everyone, and see you shortly for the Middle East and North Africa session. Thank you very much, and have a good day. And to end us with the words of the IMF chief from yesterday, Kristalina Georgieva, if you do not like the COVID pandemic, you will not like the climate risk challenge, even a small bit. Thank you, everyone.
Thanks, Ruben. Thanks, everyone.
Thank you.
Thanks, Ruben. Thanks,